Welcome to the Titans of Industry show. I'm extremely excited to have Max Porterfield, a good friend of mine and a CEO of a company that I'm personally a shareholder of, Callinex Mines, with us. And actually, we're going to talk a lot about what's happening with COVID-19 and with hard assets in general. And we're just going to dive very quickly into an update on the company itself for anyone who's a shareholder or a prospective shareholder, or just wants to know exactly what's going on with the entire resource sector globally, because it has been deemed an essential business in Canada, but in other places around the globe, 25% of mines are getting shut down. This is huge. We're already seeing that the premiums for bullion dealers are $2,175 an ounce of gold for a 2020 Eagle. We're seeing even more for the numismatics. We're seeing silver trading at around $25 to $30 an ounce with the premiums, and obviously we will see more supply constraints as we go forward. And I really wanted Max, who is a professional in this sector, to tell us everything that's going on and what he's been hearing, because he gets to see data that many people don't have a chance to look at. So Max, thank you very much for joining us.
Thanks so much for having me. I'm excited to be here.
Yeah, I want to ask you first of all about COVID-19. Obviously hopefully once in a lifetime event. How exactly is it impacting the mining business as a whole? Because you have explorers, you have operators, you have developers, you have the investors. What does it look like out there?
Well, it's definitely unprecedented times for sure within the space. I couldn't imagine that going into 2020 that you'd have global mine supply getting shut down due to a virus outbreak in this pandemic that we're dealing with. So with that being said, and the zinc space has actually been hit the hardest from shut down these operations, as you mentioned earlier. Globally right now, you've got 16% of mine supply in the zinc space that's come offline. So the most impact in the base metal space. Second to copper, 10% of copper supplies come offline due to this. And again, there's a lot of operations shut down in South America, in Argentina, Peru, big copper producing areas. I think there's a lot of mines getting shut down in India as well with the current lockdown that's going to occur there that just recently started. But what's unique is here in Canada, you look at Manitoba, where we're heavy explorer and have a big portfolio. The mines are operating in northern Manitoba. With that being said, and as you mentioned too as well, mining was named an essential industry yesterday by the government of Manitoba. So there are some bright spots in seeing government policy being put in place so that operations can move forward in North America. But on a global basis, this is having a big impact on the business on the supply side. So coming out of this, I think it's going to be a tremendous opportunity.
That is really unprecedented. Look, I want to ask you about a comparison made right now by many investors between this event and 2009. Obviously, they were both market crashes, but for very different reasons. But the response seems to be very much the same. In 2009, the hard assets, after a relatively tiny Fed bailout compared to what we just saw from central banks, not just in the US, but around the world, with open-ended QE, which is basically QE to infinity, or however much money supply we need, we will receive. And now they're buying stocks, they're buying bonds, they're buying mortgage-backed securities. They're doing swap lines to other countries that will have dollar liquidity. And we also see something very new, that it's also fiscal stimulus, not just monetary stimulus. There's not money going to the banks and then perhaps it will get trickled down to everyday people. This is money going into your pocket. We saw back in 2009 to 2011 a major inflation. And I wonder if this is going to be even bigger, in your opinion.
It definitely is going to be much, much bigger. I mean, the scale and size of the stimulus is unprecedented. I think I was reading an article in terms of the size of the cost of World War II in today's dollars was equivalent to something in terms of the size of this stimulus package they're announcing today. And that's, again, adjusted from inflation. So the scale of this is going to be is quite huge. Again, you had a shorter term kind of phenomenon where all asset classes correlated, just like you did in the financial crisis 2009. You had that here recently when you had gold sell off pretty dramatically in a short period of time, but that's come back strong and rebounded. And it's going to be a very inflationary time, I think, coming out of this, and be a great place to put your money is going to be in hard assets, most definitely.
Wow, that's unreal.
Yeah,
and actually,
and I'm
sorry, go
going to
ahead.
interject to kind of continue on that is, and this morning they're already talking about the adding on to that even further with a $2 trillion infrastructure plan. And that was one of the key things that Trump ran in his presidential election cycle when he got himself elected, was on infrastructure spending. And I think that's one of the key things that that both sides of the aisle can agree on in the states, whether you're a Democrat or Republican. That everyone's always in agreement that infrastructure spending was kind of something that needed to be done. And now they have a perfect reason to implement one. And they also have a perfect reason to implement a very, very huge infrastructure spending package. And if you look at what the job creation that can come out of infrastructure, which is why I think it's going to be a key part of this recovery coming out of this, is the job creation that comes out of infrastructure spending, called the Kuznets cycle. Where basically studies have been shown that when you have an economy that spends on infrastructure spending, you get job creation for between 15 to 25 years. You've seen it work in China. A big part of Chinese growth has been over the past 20, 30 years, has been on due to their infrastructure spending and their build out of the infrastructure. In the United States, the last infrastructure build out really occurred in the 1950s with the build out of the interstates. But if you look at the life of the infrastructure, you really only have a lifespan of 60, 70 years before that infrastructure really needs to be updated and brought up to modern times. Really due to the galvanization of the steel.
Yeah.
Right. Obviously, galvanization of steel, which zinc's a critical component of, it's what you galvanize steel with to give its long life, has a finite life of 60, 70 years, and we're well past that in the United States, and something that was long overdue. So I think that's going to be a big boom for base metals demand going forward. And it's going to be a big source of job creation moving forward when they do implement this. And this is something that was been, again, discussed for many years. Now they have a perfect time to implement it, and you're seeing that being discussed today. So I do think that's going to have a big impact on the business and a big opportunity when things aren't looking so great for everyone right now.
Yeah, no, listen, I like three things about it. One, it's bipartisan. So the Democrats are the ones that really wanted to push an infrastructure program because it creates jobs for so many people. Now Trump has done it. The initial one was like 3 or 4 billion. So this is 1,000 times bigger. It's 2 trillion. And it will create jobs, and it's in an election year. So if you're getting a job courtesy of Donald Trump, I also like the fact that if this gets pushed through, the reason to vote Democrat is kind of diminished, and the market might be starting to price in a Trump re-election, which is obviously something that the markets have been liking in the last 3.5 years outside of what's just happened. Plus, I did want to comment, Max, that I think so many companies, so many board of directors are going to tell their CEOs, we don't want to be China dependent. Get factories back to the U.S., get factories outside of China, get source metals outside of China, and I think all of that will play a lot into this hard assets, real assets type boom. And with that, I want to ask you: with many prominent investors have now said that this rally in the dollar, the shortage, the epic shortage that we saw in dollar, where everyone just sold everything during that minus 35% sell-off, has now caused a spike in the dollar index. But now, for the past week, it's been spiking down. Actually, it had the worst week since 1985, since the Plaza Accord, where the world's central banks and governors and etc. they got together and said, hey, the dollar is too strong for this economy, for the world economy. We saw oil contract by 60%. Everyone's short commodities right now because there's no industrial demand. Is this like the perfect moment or what?
Yeah, I do think it's incredible investment opportunity because listen, I'm always going to bet on the on human nature, resiliency of people, and quite frankly, look at history. Betting on people has always been the right bet to make for people to bounce back and persevere, and that's really, I think, what we're all betting on. If you compare this crisis towards as well compared to the financial crisis, this one you can actually have like see a way out of. At that time in the financial crisis, you really didn't know what was going to unfold, what was going to go under, and also people were a lot slower to react during that financial crisis than now. I mean, the reaction speed. People can criticize a lot of different ways, but if you look back and take a broader perspective, they have moved very, very quickly. With that being said, I think that the sell-off that occurred in the equity markets was very, very quick. You had a flight to safety, and that's what I've said. Everything correlated. You even had, a pullback on gold, silver, all commodities. Everyone a flight to safety, and I think that's going to be, a big opportunity for investors moving forward, though, because at the end of the day, the supply-demand business, and it's really going to be affecting supply side. So it's not like you have a situation where you have mines that are continuing to operate right now and building up excess inventory, where you already might have had robust inventories. You haven't had robust inventories. The supply side's been very, very tight in the base metal space. And again, you're just exacerbating that with the mine closures that you're having right now, while you are having weakening demand. But I do think we are going to have a restart. There is going to be a recovery once we, kind of dealt with this issue on the spreading of the virus, which, again, I think the reaction right now globally is one of unity. And I think we are going to come out of this a stronger country in terms of North America and the United States. I am a dual citizen and do reside in Canada, but I am an American. And I do think that the bringing manufacturing back to the United States is going to create a real big opportunity to bring that latest and greatest technology to the U.S. As well. So, the 3D printing, I think, that could be a big industry, in bringing those type of high-tech manufacturing jobs to the United States is definitely an opportunity, and something that, quite frankly, I don't think that the United States is going to gamble in terms of where they're going to be locating, their medical supplies going forward in the future. I think these things might be looked at more strategically than they were before.
Yeah, definitely. Look, there are many countries that have a ratio of hospitals to churches that is unbelievable. For example, in Romania, there's 28,000 churches and there are 586 hospitals. And there's a lot of religious countries that are like that. Now, I'm not saying something bad about the churches, but there's definitely going to be much more public scrutiny as to where funds, tax money is going, and what gets treated as a priority in society. So,
Well, I'm not an overly religious person, but I will have to defend the churches at a time like this, because I think what we're also going to come out of the situation right now is this self-isolation. I mean, I've been self-isolating for 2 weeks now, and I know many others are taking this very seriously and doing the same thing. But with that being said, there's also going to be, outside of dealing with the pandemic, I think there's going to be mental health issues with dealing with people that have been in isolation, and how's that going to change society going forward, and how we're going to come back out of that. And I think, whether one's spiritual or not, and their spirituality can get them through the situation, I think that is in some way healthy, whatever, religious beliefs are.
yeah,
So,
no, I agree.
there is a lot of churches. The churches can't do a lot about, actually dealing with the churches, but maybe the mental health, or whoever connects with what on a spiritual level, or on any level, quite frankly, now I think it's going to be kind of critical to them.
No, 100% I agree on that. What I meant about the churches is that in the first few weeks of this, they were actually telling people, "Hey, come, congregate, big numbers of people," and then it backfired. That's
yeah.
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 I
I didn't know that about Romania.
I did want to kind of touch base on Callinex Mines. Obviously, we have a long-standing business relationship with Callinex Mines, and also I'm a shareholder of the company. You're the CEO, and I do want to ask you if you can tell me how you're navigating these storms right now for the company on behalf of the shareholders, and kind of where is the company going from here?
Yeah, I mean, we're obviously still operating. Nothing's really changed in terms of the overall business at Callinex Mines. I mean, we have a unique business in terms of how it's quite set up. I mean, again, exploration companies rely on funding sources to conduct their exploration efforts because we don't generate revenue. With that being said, we've always maintained the business running very lean. So our operating costs are much lower than our peer group because of that. We're operating on a consulting basis where we have a team of consultants that explore different areas, and then actually to get exploration work done, it's much lower cost because we're operating in known mining jurisdictions in very close proximity to infrastructure. So we don't have big mobilization costs. We don't have to set up camps where we operate, and again, we're exploring in areas that are safe jurisdictions, tier 1 jurisdictions being in Canada, Manitoba, New Brunswick, and Newfoundland. So it's, from our standpoint, we've just got to really manage the markets. The capital markets are obviously key. Obviously, we're in a position to where we can really control very quickly our capital spending, and we've made some adjustments to that end, but nothing too overwhelming. And we're just going to take the time to really focus on the bread and butter, and that's exploration. So we are going to have drill results coming out. The assay is pending, and eager to be able to announce those in the future, as well as continue to explore Canada. And I think we're all going to come out of this stronger, and resources are going to become even more and more of a key industry for the world. I mean, they call base metals for a reason, and to be exploring and looking for discoveries in North America, where there's going to be, I think, big demand moving forward with this infrastructure spending, is a place that, obviously I think we're well positioned forward, moving forward.
That's great to hear. And for people who want to know more about the company and maybe reach out, what's the best way to do it?
Yeah, you can go to our website at callinex.ca. That's CALLINEX.ca. And our contact details are on there. And then if you're interested in becoming an investor in the company, you can purchase shares on the markets under the TSX, Toronto Exchange. The ticker would be CNX. And then on the OTC in the United States, the ticker is CLLXF.
Definitely. And there's a lot of information out there, and people can do their own research. There's the company presentation, and definitely all the public filings, press releases, etc. Max, I first of all, I want to wish you a very healthy self-isolation, both mentally and physically and everything else. And let's definitely touch base real soon. Once public information is out, then we can see where the company is and what's the next steps.
Absolutely. I really appreciate catching up with you, and hopefully next time or very soon we'll be able to see each other in person.
Thank you, sir.